You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old Options Insider Radio Network, to home to many, many fine options and derivatives-related programs, including well over 100 episodes of Volatility Views. And if you're so inclined, I encourage you, check out the archives. A lot of great guests, a lot of great conversations in there for you to enjoy anytime, weeks, months, years down the road, because a lot of those topics are still relevant even today. They're not just timely at the moment. They carry a lot of good nuggets that continue to resonate, and I know, looking at the numbers, a lot of you guys like to do that. The archives are pretty popular on all of our programs. And where can you find all of those archives? Well, of course, the mothership, the flagship, theoptionsinsider.com. Click on the Insider Radio Network tab, and you're pretty much off to the races. All the shows pop up, and you could pick your favorites and download or stream whatever you feel like doing. Of course, you can also find them iTunes, TuneIn, Stitcher, wherever you find your favorite podcast programs, Pocket Cast, whatever your podcatcher of choice may be, we're available in there. If not, just grab the RSS feed and you can plug it in and it'll be in there. And of course, you can also grab our mobile app if you don't feel like messing around with those RSS feeds and all that fun stuff. And it's all baked into there, including how you can reach out to us after you listen to a program. Send us your questions, your comments, your emails, your tweets, your Facebook messages, whatever your preferred means of conversation is. We're available there, and we'd love to hear from you guys. And joining us on the old program today, the Greasy Meatball himself, Mr. Mark Sebastian. Mr. Greasy Meatball, welcome back to the Volatility Views program. There is some volatility to view these days, is there not?
There is, although today doesn't feel like it. Today it feels like the pin is on, because the S&P is doing absolutely nothing. And, VIX term structure still firm, but, not a lot happening. I feel like we're lying in wait, waiting for the Federal Reserve to make up their mind on what they actually want to do.
I prefer to think of it as the market doing us a favor, because they know we are recording Volatility Views and they don't want any major developments to occur during the show, because we would, of course, miss them. So that is them tipping their cap to us. So without further ado, let's get rolling. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we break down the week that was from a volatility perspective. We are recording this on Friday, September 11th, for all of you playing the home game on this very, 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 very inauspicious date indeed. But we'll look past that just to what we're seeing in the marketplace right now. And as Mark alluded to, it has been an interesting week today. Not so much today. Kind of everyone kind of playing wait and see. Most of the major indices pretty much unched on the day. So compared to the rockin' and rollin' we've seen of late, today a relatively quiet one. Most things pretty much slightly unched or up on the day. Not much really cooking from there. But when you look at the market, it is all kind of about frame of reference, and it is all kind of about what indicators you like to look at. And there certainly has been a lot to sink our teeth into from a vol perspective over the past few weeks, indeed over the past month or so. And again, depending on how you carve it up, it looks a little bit differently. If you look at just a couple of different periods, and we don't touch on net vol percentage moves that often here on this program, but once in a while it's useful to put these things in perspective. And we saw from the end of July, so the 31st to the 21st of August, which is the week right before the big meltdown really set everything off. We saw vol by itself just in that period jump about 131%, looking at straight VIX percent move. I know, Mark, you love that. And then, of course, from the 17th through the 24th, which is that getting into that rocking, rolling period, we saw VIX itself about 300%, 3x move from about 13 to over 53. That, of course, on that August 21st time period, that magnitude of that move was, at the time, was the third largest daily move in the VIX since 2005. Of course, you break it down some other ways, looking at some other indices and some other products, you can do it a little bit differently. And people like to look at a variety of different indicators. And this year certainly seems to be bifurcated in that sense. If you look at the early part of the year, we were kind of lamenting. We were kind of holding our hands. We were kind of saying, hey, there's nothing really trading. VIX was doing no paper. The markets were moving upward, but it wasn't really a rocket to the north. And it wasn't a lot of volatility. It wasn't really a lot to speak of. Anything. In fact, in the first 6 months of the year, looking back at the Dow now, a different index, it hadn't moved up or down more than 3.5% in the entire first 6 months of 2015, something that had never happened in that product before. Dow setting a lot of first-time records this year. Some interesting times from a Dow perspective. And of course, we had the biggest one-day move ever to the downside back on August 24th. If you're looking at the S&P in terms of how these things, when things start rocking and rolling, things tend to move in lockstep. And a lot of people like to look at that as well, like to look at the kind of the correlation of how things move together. And some of these indicators, like when all of the underlyings in the S&P, for example, 80% of them or more, all move in the same direction in one day, those are pretty significant events. Those don't occur very frequently either. There were 11 of those just in the past couple of weeks, 11 of those days. That's only happened just 13 times in pretty much the entire first 6 months of the year combined of this year. So that's a very, 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 very topsy-turvy period in and of itself. If you track those types of metrics, there's never been a 15-day trading period that has had as many of those, what some people like to refer to as the all or nothing days out there in the market, where 80% or more of the S&P underlyings are moving in lockstep. So depending on how you carve up the time frame, the frame of reference, and the underlying, things are moving in different ranges. But still, the net takeaway from all of that is that things are rocking and rolling. All right, all that in perspective, Mr. Sebastian, let's look back at the week that was. Things are certainly rocking and rolling today, notwithstanding. So what's really caught your eye? What's top of mind for you this week from a vol perspective?
I mean, for me, it's just, lying in wait. We've kind of been spinning our wheels here and watching volatility kind of do nothing, and trying to and watching the market really do nothing and trying to figure out where we are going next. And that's really been the big driver.
Yeah, we talked last week. We had the Typhon guys on here talking about VIX futures term structure and how wonky, quote unquote, it is out there or was out there. And we did see some interesting developments out there. It did seem like it was kind of lightening up on the front end of the curve for a bit this week, and then that bid came back in and kind of bid it back up a little bit again. So yeah, the VIX futures term structure has been all over the place these days, and it's a lot of crazy developments out there. Speaking of crazy developments, maybe before we even get into some of the big VIX stuff that was cooking off this week, let's look at one of our other friends on this program. We don't have a chance to really dig into it as often as I would like because it just hasn't been doing a lot of volume out there. But from a net movement perspective, it caught our eye this week. Of course, I'm referring to the Russell VIX, the RVX. And as you guys know, it is Russell, of course, one of our partners on this program. And the small caps are always intriguing from a volatility perspective. It's one of the reasons they launched VIX on the small caps, is because inherently they should be more volatile, just by definition, than the large cap S&P 500 stock. So you should always expect some sort of premium in the RVX to the VIX, all things being considered. And that's pretty much exactly what we've seen since that product was launched. Until this week, we saw RVX drop to 26.33 in that RVX index, while the same day the VIX was actually up about 1% to 26.5. So they actually crossed for the first time in RVX's short history. So interesting stuff in and of themselves, maybe perhaps indicating a bit of a shift of risk. A lot of people looking farther afield, overseas, to China, elsewhere. Risks that tend to weigh more heavily on larger cap names and a lot of smaller cap names that tend to be domestic. But that, of course, there could be a lot of other reasons for that as well. So interesting stuff. Mark, I know you watch the Russell VIX and the RVX stuff out there on a regular basis, looking for these types of moments when they might become interesting. What's your take on what we saw out there in Russell Vol this week and how it's hitting relatively historic lows for this product?
Yeah, well, one of the things to understand with the Russell is that, relative to the S&P, it's got less international exposure. It's got less exposure to, it's got less exposure to currency, less exposure to trouble overseas, all sorts of different pieces like that. And that's a big driver of what's going on and maybe why this isn't working, why it's trading the way it's trading.
Yeah, I wish I could sit here and list the large number of trades we're seeing out there in RVX options. Of course, some of the recent times you saw RVX actually trade quite a bit from an options perspective was when it really diverged quite a bit from VIX in the other direction. So not when it crossed, but when it really kind of got far afield. And we saw a lot of spread trading kind of lighten up RVX for a while against the VIX. And so far, at least, this little crossing of the paths here, crossing of the streams, RVX versus VIX, doesn't really seem to be translating into a ton of paper. That product has hovered in the 60 to 70 contract open interest range for the better part of this year, and it seems to be hovering right in that same range again. So far, at least, that hasn't translated into a lot of paper out there, which I think is kind of surprising. I know the guys over there at Russell are working diligently behind the scenes to come up with a lot of interesting initiatives that are going to help drive some more paper for that product in the near term. But a lot of us, it's an interesting product and certainly an interesting area of the market. The small cap area doesn't get a lot of love, certainly not as much as the large cap stuff. So certainly something I think we're going to keep an eye on as we keep rolling, and hopefully maybe a few more of these days like this week where we see some inversions and other developments out there that will maybe draw a few more eyeballs to it. And you think, Mark, a week like this, you think these levels alone would probably attract some spread traders, but it hasn't really materialized out there at all.
Yeah, no, you would have thought, but nobody, there's no liquidity there, unfortunately. And so, there's just nothing you can do.
That is true. Liquidity begets all things in this business, and if you have to come in and you have to pay a hefty premium to hit a bid or lift an offer, then it kind of kills the spirit to trade the product. So yeah, we're still waiting and seeing on that one, but still interesting developments out there. And I know they're working, like I said, a lot of things behind the scenes. I reached out to those guys to come in and talk about this today, but they couldn't make it. Unfortunately, we'll have them on soon to talk about that, as well as there's a lot of other cool derivatives and volatility oriented things cooking up over there at Russell, and we want to get into those pretty soon on the old program. And now moving our gaze back to our typical realm, the old S&P 500 volatility, aka the VIX. Again, it's looking at two out there, and it's before you even get into the VIX second, looking at S&P again, looking at some numbers out there. It has been kind of interesting to watch. People always write in a lot to us about how call heavy VIX is from an options perspective. In fact, I think we have a listener question about that today. But they don't write in as much with questions about why SPX is so put heavy, and yet it clearly is. And certainly it is extremely put heavy these days for those of you who tend to put a lot of stock in these. Looking at the open interest out there in puts right now, It is in the 95th percentile for how many puts are open out there in SPX land right now. Calls, though, 98th percentile, though. So it's just hot all around right now in SPX land. But put love certainly pretty strong out there, giving some indication that certainly the fears have not subsided. The rocking and rolling we're seeing in the marketplace certainly not subsiding. About a little over 2-to-1 puts over calls out there in SPX land right now. So for those of you out there always writing in about VIX land, not really asking about the other side of it, the SPX side, that's what we're seeing out there. Of course, 30-day vol out there, fairly aggressive as well, about a little over 21.5 or so. Again, about 93 percentile for what we're seeing out there, and realized over 30. About 32% almost. So that's blown. That's off the charts in terms of percentile out there. That's rocking and rolling. And in terms of the big product, the mothership, the VIX Options, was an interesting week overall. We did see some paper, not as much as perhaps you might have expected. But again, I think that kind of goes back to the frame of reference discussion as well, where in the early parts of these moves in late August, when it was fresh and new, it was terrifying. We saw a lot of paper unfolding, and now as we're starting to become accustomed to these plus or minus 1% swings intraday, the paper is starting to taper off a little bit, and so we're still seeing decent volume, but not these near record levels we have before, with some of these big trades notwithstanding. We did see a couple of trends out there that were kind of interesting this week overall in VIX Options. Seemed like a couple of them. One of them seemed the fact that people were hitting some bids and calls out there in SEP, at least unloading some SEP positions. We saw some pretty sizable ones. I think there was a 3-way out there, 22, 23, 27. I believe it was done on a ratio, 20,000 by 20,000 by 50,000. I believe those are all net sales. I'll have to check the data to make sure, but that was a sizable trade right there. So you're talking 90,000 options going up in one big, pretty much unloading of some SEP vol there. We saw some higher strike ones, 42 halves going up as well as a funky, looked like a SEP-OC ratio call spread going up. I have to get more details on that to get the exact prices for you, but still a lot of funky paper. And then going in today, we saw a little smaller size but interesting risk reversal. Someone actually coming in and buying upside in OC. So SEP dumping, OC buying. Maybe that's the narrative. We did see filing this in the Crazy Town Annex, the Crazy Town files. We did see someone coming in and loading up on about 5,000 DC60s, paying a quarter for that privilege. So there you go, Mark. It's not February, but we're already getting some of the crazy upside that we like to see. Usually in the early part of the year, people are loading up on 75 handle calls and things like that. This is the comparatively reasonable 60 handle. But still, we all saw what happened just a few weeks ago and how much it took to get the VIX just to flirt with 50 ever so briefly. I think that puts a 60 handle wager like that in some sort of perspective. So, Mark, was that one of your option pit mentees loading up on the D60s out there?
Oh, yeah, just backing up the truck. Those are, nothing wrong there. Obviously, easy winner. No, that was not one of my students.
Well, of course, we're joking. That was not a trade I don't think anyone would recommend with a clear head. Who knows? Maybe some newsletter did recommend that one out there, in which case I would immediately unsubscribe from that newsletter. But that said, we do love the more esoteric, more optimistic paper that goes up out there. But aside from some of these interesting trades out here, Mark, anything catch your eye from a VIX Options perspective? Any trades that were lighting it up in your chat room this week that seemed worthy of note?
Volume's been pretty light. I've been looking at kind of little weird off-center butterflies, butterflies where, maybe I'm, where I'm, long and in the money and short and out of the short and then short and out of the money and long and out of the money, where, the VIX is trading over the VIX future. So, what the VIX, one of the trades that I've been liking has been, the VIX is 26 and the VIX future is 25. I've been kind of looking at like the 25, 28, 30 butterfly, doing trades like that where you capture a little bit of the term structure, and I like the way those have been setting up.
Interesting. Do you have any of those on right now?
Yeah, I've got a few of them.
Well, there you go, listeners. Some VIX. I don't call that a funky fly, if you will. It's pretty straightforward, actually. So it's not that funky, but funky enough for our purposes here on the old program, looking at what else has been lighting it up out there. And like we said, volume was robust a few weeks earlier. This week, not so much, but still some decent numbers out there. Looking at what's open, what's the hot strikes across the board right now out there in VIX land, and we're looking at the number one spot. But relatively anemic 250,000 contracts kind of topping the list, except 25s open there. And then the NOVE, going out to NOVE for number 2. So NOVE starting to climb up the chart. NOVE 26s with about 235,000 open. And then some puts, actually, which is, gets to another, I think, listener mail question we have a little bit later. Some put love, in particular, the SEP 20 puts with about 218,000 contracts open up there. It's been quite a while since we've seen a put that high on the list. I think that also reflects kind of where we are in the landscape right now. Kind of hard to have a put top on the list when you're hovering in the 11 to 12 handle range. When you're in the mid 20 range, some puts make a little bit more sense. Rolling down, number 4, SEP 20 is about 194,000. Then some more puts on the list. Number 5, so 2 of them in the top 5. The SEP 15 puts with 190,000 contracts open. And the rest of the list is all calls, SEP 24s and 23s and 30s with 180,000. 175 and 175 open respectively. And then coming in at the end, the SEP 22s and the SEP 16s with 173 and 164,000. All of that combines for a whopping 10 million contracts open even. Of course, all contracts across the board, not just the top 10. About 6 million on the calls and about 4 million on the puts. So you can see how we're leaning from a call to put perspective for all of you out there who like to look at those things and like to make sense of the call to put ratios out there. And if we're making sense of things, it's now time, Mark. This is a hard one to make sense of, but I want to discuss it nonetheless. This was actually something I was chatting about with your colleague, your counterpart, your better half, Andrew, over there, and it seemed worthy of discussing on the show. We've talked before about the long and tortured history of the VIX up, VIX down product. That is, of course, listeners, a product that started its inception, was touted to the masses, to the world, as this product that was going to essentially solve the quote-unquote problems of the VIX term structure, as we've seen as it's been unveiled to the market and hit the ground running. It's kind of a different beast. What it claims to do now is try to deliver the spot VIX, a tradable spot VIX. We've given our opinions on it before and kind of how it doesn't really tend to deliver that in any way, shape, or form. But if you thought products like VIX options and the fact that they don't queue off the cash or the VIX futures term structure, if you thought that was too crazy, too esoteric, too much minute detail for your interest, then for the love of God, stay away from the VIX up, VIX down product, because what a couple of weeks this one has had. Let's see if I can break it down for you listeners in a way that makes a modicum of sense. If you looked at this one, you may have started off and seen, wow, this thing really did terrible. It took a huge hit, even though the VIX had spiked. And actually what that reflects actually is a huge distribution that they announced after the VIX really went on its rampage. That if you looked at that just in the 5 days of the period from August 21st to about 28th, 17th to the 21st, that was actually a pretty decent return if you factor in the distribution, which was about 90%. Some people will say that outperforms the futures. I think we'll leave that discussion for another day. But still, getting into the heart of these distributions, special distributions, regular distributions, if you look in the perspective of this thing, whenever the underlying, which is the VIX in this case, moves plus or minus 75% from its most recent distribution date, and it certainly did that, then it's time for a special distribution, which is used as a quote-unquote protective measure for the investors. And of course, in that time frame, it moved about 115%, so that set off the special distribution trigger. So if you held that, you got a cash payment of the VXUP, the VIX Up product. They also announced that wasn't enough for you to bend your brain. They also announced a corrective distribution on August 21st, which was designed to force the removal of prevailing and consistent trading premium and discounts as compared to the closing net asset values. And this occurs when the trading prices deviate plus or minus 10% from the closing NAV over 3 consecutive days. So that means if you had VXUP or VXDN on the next scheduled date, remember they have regular distributions in these products as well, not just the special ones. On their next scheduled date, which is September 15th in this case, you will allocate an equal number of offsetting shares. So if you hold the VXUP, you will be issued an equal number of the VXDN and vice versa, hoping to somehow net out that risk and create a risk-neutral position. And it goes on and on from here with the other corrective distributions and things. And what a product this is. If you're trading this, more power to you, because this thing makes about as much sense as pretty much nothing else I've ever seen in this space. And it kind of also shows, Mark, just the ridiculous lengths they had to go to create something that even attempts to approximate the quote-unquote spot VIX. But can you make heads or tails of any of this nonsense, Mark?
No, I mean it's the silliest thing I've ever heard, and I don't understand it.
Yeah, accordingly to this, if you held it, you did all right in those first couple of days with that distribution, and then now you're having your positions offset and you're getting special distributions and corrective distributions. And the moral of the story, listeners, is that unless you're deeply fluent in the nuances of ETF construction and these various distributions, and this all makes sense to you, then by all means dive in. But I think for 99.9% of the people out there, this is just torturous. This is really reading these trades and looking at these things. It makes you wonder who is trading these things. It's getting a little bit of volume, certainly.
You know, they're nice guys. They really are. But this thing is just a complete mess.
Yeah, I've reached out to them a couple of times. I want to get them on the show because I hate to keep just beating up on the product. I want to hear kind of their perspective on it and their side of it and why they had to make some of the choices that they made and kind of give us some of the reasoning behind the obvious multiple iterations that went on with this product before it actually saw the light of day, because clearly there's an interesting story there. Someone who's interested in just the creation of a new product, let alone a volatility product. I think there's something interesting in that. But yeah, it's just we haven't had a chance to really get them on board, or maybe perhaps in the light of all this other fun stuff going on out here, they're perhaps keeping their heads close to the vest a little bit. I can certainly understand that. These are not exactly boom times for that product, but still, yeah, this is certainly a head scratcher, and it certainly makes us, long for the days when perhaps some other ones will come out. It could be maybe the Voldex stuff, the skewless VIX, or perhaps the Volex stuff, which is, of course, the realized vol product we talked about on this show many times. Hopefully one of those will come out, and certainly compared to these, both of those products make a wee bit more sense. Would you say, Mark?
Yes. Just a little.
Just a little. So yeah, I had to bring that up. It kind of bogs the show down, and I apologize for it, listeners. But it's just I was pouring through this myself the other day, and I thought this is madness. We have to discuss this. This is who trades this. If you let us know, listeners, if you're out there and you trade this thing, either one, VXUP or VXDN, write in. Let us know what you think of it. Are you liking it? Are you enjoying these myriad distributions that are coming your way, or is it just you're tearing your hair out in frustration? I'm guessing it might be the latter, but who knows? If you just got that special distribution in the beginning and nothing else, you're actually looking all right. So maybe it's not the worst thing in the world. Either way, this is just I think to call it technically crazy town out there is not overstating things at all. Let's move on to a quieter area, Mark. That would be, of course, what's going on with the Fed and rates and all the vol products out there. Before we even get into that, have you been watching all this, the Treasury VIX stuff that the SIBO has been disseminating? Anything catching your eye out there? Anything worthy of note? I've been kind of monitoring it a bit of late. I haven't really seen much, but have you seen anything recently that's kind of caught your eye out there? So, hey, this might be worth some consideration down the road.
A little, but nothing overly exciting, to be honest. I have not.
Yeah, I think the market is kind of agreeing with you just across the board on Fed and Fed-related products, looking at Fed funds and other things out there, pricing in less than a third of a chance now, 30% chance that the Fed is actually doing anything in September. Actually, I think it's a 28% chance to be precise out there, and actually an increase by Dees is a little higher, close to 60%. So those of you out there keeping the love alive for a raise sometime in 2015, you got almost 2/3% probability that you are correct. So that may give you a little bit of solace, a little bit lighter than it has been, but still not too bad. But I think I think the probability of a raise next week at the meeting, certainly in light of everything else that's going on in a macro perspective, seems a little bit nuts. And, Mark, we were kind of chatting about this. I know you have that outstanding wager with Jared. We were chatting about this on yesterday's, option block, and just looking at how much latent volatility this is causing for the market, how much debate and back and forth this is causing in the market, the will they or won't they with the Fed. At the end of the day, it's if they do anything, it's 25 basis points probably at the worst. It's kind of a lot of noise for very little effect. I mean, is 25 basis points, is that really going to be the thing that kind of just puts the gun to the head of the market and pulls the trigger?
Exactly. Highly doubtful, but I think it shows a tone and a change in the market, and maybe kind of takes away the belief that there's the old Bernanke put. Now it'd be the Yellen variant swap, maybe you could call it, or the Yellen VIX call. But for alleged clarity, they've been as unclear as they possibly could be. And I think that's more the issue. If I had to put my my finger on anything.
Yeah, it hasn't been, I don't think, the best messaging from the Fed. An entity that is notorious for Fed speak and obscuring the message almost by definition. That's kind of how they have to do it. But still, it's kind of been a lot of, hey, don't forget about us. We're still here. We could probably do something if we wanted to, but we don't know what, and it probably won't be that much at the end of the day anyway. So it seems kind of like a mixed message that they're throwing out there. But it sounds like you're still pretty content with your wager. And have you followed up with our friend from formerly of Condor Options? Is he getting ready to buy a nice juicy Chicago steak, or is he still adamant? Is he still in this 60% probability range of a Dece raise is going to save him?
Yeah, we got December. He's thinking, December. That'll be. I'm going to enjoy that free steak. It'll be nice.
Well, we'll see. Perhaps I'll scoot in for a nice little appetizer or two while you guys are enjoying your steaks. But moving on here, looking at another product area that's seen some vol of late. Of course, talking the crude, and at the earlier part of the year when the equities weren't rocking and rolling, certainly to the degree that they are now, crude was the story. We were joking many times here on the show that we should just have a crude oil volatility show because there was enough going on out there from a skew perspective, from an underlying perspective, from a movement perspective, that it was worthy of a lot of analysis. It's still rocking and rolling. Certainly not the monster it once was. NYMEX crude hovering south of that 50 handle right now, right in the 45 range or so, off about $1 or so today. So taking on the chin yet again. So still a lot of vol, a lot of uncertainty out there from a crude perspective. I think we've seen kind of the skew materializing where it's going to be for the near future. People have realized that there still is a lot of vol out there. OIV, OVX still kind of creeping up, and people we haven't seen the preponderance of upside wagers, haven't seen a preponderance of downside hedging. It's kind of both sides, both wings seem to be catching their share of love out there in the marketplace. So crude still an interesting one to watch, but we haven't seen as much out there of late. Mark, I know you like to watch more than the big futures options. You like to watch the XLEs and the USOs and those types of products. And I know a lot of our listeners like those as well. Anything shaping up out there from a vol perspective that's intriguing you of late?
In oil?
An XLE, USO, take your pick.
I mean, it's been high, but I feel like oil's kind of calmed down after kind of getting hammered and then rallying right back. I mean, it's been pretty much stuck in a tighter range, and they're letting that volatility come in. We did see OIV make a run at over 60 again, and now it's back below 50. So I'm interested to see where it ends up trading, but I'm not. I don't think that's where the excitement's going to be for the next few weeks. That's just my opinion.
Yeah, it doesn't seem like they're positioning for any inordinate moves in either direction anytime soon. At least not from what I'm seeing out there. No,
they're not. And, we'll go from there. I just don't think there's going to be anything exciting. The Iran deal passed. I guess that could have been, something that caused volatility. It did not. I don't know where you're going to get the volatility from, frankly.
As we move on to other products, other segments. In fact, it's time to move on to the segment of the show that I know you guys love because you guys get to be featured on it. It's time to move on to the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, like the man said, this is the portion of the show where you guys get to take the reins and fire away with your questions, your comments, your insights, not just for us, but for your fellow Vol Views listeners. Going to kick things off with Mr. Rose. He writes kind of a frequent theme to a lot of your questions. He writes, on August 21st, the S&P lost 3.19%, and the VIX was up 8.89 points. The following Tuesday, the S&P was down 2.96%. The VIX was up only 2.38 points. Next Wednesday, the S&P was up 1.83%. VIX drops 5.31 points. Please explain. Mark, this is, like I said, kind of a common question. We get this a lot, of the nuances and vagaries of what the VIX Cash is actually doing out there, why it has a bias to the downside, why it pops so aggressively to the upside, et cetera, et cetera. There's a lot of different times we've touched on these various points. He's asking about some specific dates, but even these specific dates aside, I think it's kind of worth maybe having another discussion about what it is that we feel at least really drives this thing, and then certainly on some of these more aberrant days, what is up with some of these moves we're seeing out there. So I'll let you have pride of place, Mr. Sebastian. What do you have to say to our friend here, Mr. Rose, who, like a lot of our listeners, is kind of scratching his head as to what the hell the VIX is actually doing on some of these days?
Right. Well, the thing you got is the difference between realized vol and volatility expectations. And the VIX is trying to calculate volatility expectations, and realized vol is just kind of what's happening that day. So, typically when the market gets that first shock, that's when everyone goes, oh my gosh, this is super scary. What's going to happen? And you'll see those are the times that the VIX really explodes. So it's not just the move, it's also the expectation. So the market really doesn't know what's going to happen. And that's why the VIX is up $8. All right. Now, the next time the market is still not sure which way it's going to go, but we're much more clear on what the problem is. And that's why the VIX doesn't rally as much. So, and then obviously when we get a decent sized rally, that will take a lot of breath out of the market. Now, in addition, there are some pieces of VIX, especially in a low volatility environment, that cause it to be especially reactive in a market sell-off. And, that's caused by skew and structure of kind of how the products develop. So, generally speaking, on a big rally, the VIX, just by kind of vol crunch, will lose more than it gains on a big sell-off if there's not a lot of information around it. It's really just these huge events where the market is not sure what's going to happen that cause the VIX to totally explode like that. The vol explodes higher, and recently they've been sucking it out as fast as they can. This has been the first time where those vol suckers got completely caught. So, that's why it reacts that way, because it's trying to look forward, not at what exactly is going on. And in addition, on those rallies, it has that kind of funkiness to it where vol will get extra compressed, especially when coming from high volatility.
I like that, the vol suckers. That might be a good title for our program today. Sucking the life out of the volatility.
I mean, they are. I mean, vol vampires. They are. They just look. I mean, I think one of the greatest examples is how quickly they took the VIX from 20 to like 14 in July out of that Greek crisis.
Yeah, that was a good one. I think that's one of the things that actually, in fact, maybe I'll get to the next question as it kind of ties into it a little bit too. This comes from someone who calls themselves Confused. I I feel your pain there, sir. Don't worry about it. A lot of people are confused by what we talk about here on this program and what goes on in the volatility realm, including all that fun AccuShares stuff. That's enough to give you a headache. But he or she writes, hey, is there an overwhelming bias to trading calls in the VIX? Why? What about VIX puts? Does anyone trade them? We'll take the first part first. Talked about that before on the show. And what Mark was just referring to, of course, that predictive nature of the VIX and the downside bias that it has from an underlying perspective and certainly from a upside perspective and a vol crunch. That's why you trade that thing. It's kind of all table stakes until you can catch that big pop. And I think going back to what Mark was just saying about what we were seeing in July, we had that brief flirtation with the 20 handle out there in the VIX Cash, and it was ever so brief, and then it just came right back down, crushed it again. Like you said, the vol vampires down to the mid to low teens again, and if you were listening to our show throughout most of July, you know all the paper we saw out there from a VIX option perspective was just loading up on upside. Most of it was in the mid to low 23 and higher strikes, it seemed like, for a lot of that paper. So they had the ever so brief moment where they might have been able to at least maybe scratch some of that stuff. They never broke through any of those strikes, obviously, but the near-term futures got a little bit higher, so they had a chance to get out for something. And we saw a lot of that paper didn't. It was still open once they crushed the vol vampires struck and crushed it back down. So they kind of missed their opportunity. So what we kind of saw going into the early part of August, actually, was seemed like people were kind of giving up the ghost. They were actually wrote about some put buying, which is interesting, and we'll get to that. It's the second part of your question, as well as a lot of call selling. People were just not getting into as much of the upside love. And then, of course, what happens they got burned in July. And then what happened, of course, in the latter part of August was there it goes. And so the people who had stuck with it were quite happy, including our 1x3 friend. He did quite well. But in terms of some others, they may have just gotten burned in July and gotten out, and some actually had the temerity to buy puts, and that didn't work out too well for them either. So that's why the bias is there, because the upside explosion, look what we saw on the 24th, went from net points in the VIX Cash perspective. You went from the teens up to 50, 53. I mean, that's why people buy the calls. That overperformance to the upside is kind of the driving engine of that entire product. It's also the primary use case for it. People are buying VIX to quote unquote hedge their broad equity portfolios from a vol perspective. What are you going to do with that? You're going to buy the upside. That's what you want. In terms of the puts, like I mentioned, the only time we've seen a lot of it until now. Of course, now the VIX is higher. I mentioned in the top 5 of the hot strikes, 2 of them were puts, which is the first time we've seen that in quite some time on this program. So that narrative may be shifting a little bit, partly because, like I said, it's just structurally the product is higher. So there's more relevance to a put. When the product is trading in the mid to low teens, what are you going to do? Buy a 9 put? It's not that exciting. So whereas now in the mid 20 range or even higher, depending on some of the futures you're looking at, it's much more attractive to put on a put position from a speculative reason, as well as, of course, if you have some VIX positions, maybe you want to hedge to the downside, a put is an attractive thing. So people do trade them, just not quite a bit. I mean, look at the numbers we just quoted you. 60% of the open interest right now is calls. 40% is puts. That's actually somewhat high. Usually it's a lot less than that. So interesting stuff. Mr. Sebastian, you just talked about your VIX vampires. That's a good one. I like it. But anything else you want to add here to our friend who is confused about the overwhelming bias for VIX calls and why doesn't anyone love VIX puts?
Well, I mean, again, think about it this way. In 1987, they theorized the VIX would have gone to like 180. And we've seen a VIX print below 10 on, 9 days in total. And I believe the lowest settlement is still above 12. I want to say 1206. So the idea that, buying puts that are, and really, if you look at, outside of the 2008 period and the 2011 period, most of the VIX options history is around really a low volatility environment. And so that's really one of the reasons why there's that huge bias. And then again, you got to understand the nature of the product. People are using this as a hedge. And, owning VIX calls is kind of the same reason why SPX has skew. There's just greater demand because people are hedging. So that's what creates it.
You probably have a whole show on that. Why does VIX have skew? It's a product that, technically probably shouldn't, but skew is just paper at the end of the day. It's just customer order flow, and that's what shapes up. So the skew materializes? A good question, Mr. Confused. I don't think you're as confused as your handle may let on. Not a bad question. And again, yeah, maybe this will be the order of the day. If we stay up here for a little while longer, at least, and it certainly seems like we will. I mean, not to foreshadow the crystal ball, but certainly at least till the Fed gives us some inkling of what the hell they're up to next week. We're probably not going anywhere to the downside from a vol perspective. So who knows? Maybe some put love will be lining up. Maybe people will be loading up on puts going into the Fed meeting, thinking that's the end of the vol for the foreseeable future. So who knows? If you're interested in VIX puts, this may be an interesting time, or just bearish VIX trades in general. It may be an interesting time to start mulling over those. If you can beat the VIX vampires to the punch. All right, coming up, we got time. Let's see here for one more. This is a pretty straightforward one. Mr. Sebastian comes from Jacob. He writes, hey, what are some examples of basic volatility ARB strategies? Thanks for the program, Mark. We talked about this on the show before too. We talk a lot, typically in some of the more spread oriented strategies that we like to do, like different indexes. We talked before. Russell versus VIX, those levels are very attractive to a lot of people. So people will sometimes try to trade those spreads. I mentioned when RVX got most of its interest in its short lifespan was when it really diverged a lot from VIX. And so a lot of these vol arb traders came and brought it back into line with a lot of aggressive spread trading. Surprisingly, didn't see much from those two crossing streams this week, but maybe that will materialize out there. I know, Mark, you like a lot of the Russell VIX kind of stuff as well. I mean, it doesn't line up that often, but when it does, that's one of your go-to vol arb type strategies, is it not?
Straddle swaps when vols get out of line. So, one of the things we've been talking about, since you can't really play RVX versus VIX, you can play SPX versus Russell. And if the vols are going to be this on top of each other, it may make sense to buy kind of Vega neutral, premium neutral, Russell straddles versus S&P straddles, and something like that. So short S&P straddles, long Russell straddles, and try and arbitrage the movement there. We definitely have seen people do. People that try and short VXX are trying to take advantage of, are trying to quote unquote arbitrage the term structure. Not really an arbitrage, but you definitely have people develop strategies in that respect. And then there are people that will trade VIX versus SPX. They'll do a cash spread in one versus some sort of VIX spread in the other, and try and put the whole trade on.
And I have to admit, when I was looking at those RVX and the Russell numbers earlier this week, that I kind of had the same thought. If you buy into that structural nature of small cap volatility, and why shouldn't you? It exists. This is a momentary aberration. If you do believe that structurally small caps are going to be inherently more volatile than large caps, I think that's going to return to, this is not just a brief this is a brief aberration, and we're going to return to that norm sometime in the near future, then certainly any sort of long Russell short SPX vol spread makes a lot of sense. So that's certainly one you could certainly be thinking. Well, it's a very basic one to do too. You're not getting into some of the crazy weeds of esoteric strategies out there. So you ask for basic ones. That's certainly one of the ones that I'm keeping an eye on right now, and it's pretty relatively straightforward one you could do out there as well. You don't need a super crazy account size or anything like that. So interesting question there, Jacob. An interesting question, everybody. Unfortunately, it's all the time we have for the vol voicemail. Keep those questions coming. If we didn't get to you this week, we'll get to you on a future show. And now it's time for us to keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is the portion of the show where we prognosticate recklessly on the future from a volatility perspective. And Mark, a few weeks ago, we kind of went out on a limb, and we both said, hey, it didn't seem like vol's going away anytime soon, even though I think some of the cooler, more rational heads out there may have said, yeah, it's going to come back off. We had a lot of names like the folks over at Goldman and Buzz saying VIX is overpriced by 2 points, which is still one of my favorite quotes of the year. But it certainly did come to pass that we were indeed at the same, actually a little bit inflated levels last week. And here we are now this week, hovering right around those same levels yet again out there in a VIX Cash land. And I think we kind of alluded to it at the top of the show that, certainly as today's session is going on, not a heck of a lot going on seems like everyone's kind of keeping their powder dry ahead of the big FOMC meeting next week. So I guess it's kind of a binary event for next week, Mr. Sebastian. The will they, won't they? Fed does something, we'll probably see some aberrant reaction in the near term, but then eventually once the shock wears off, maybe even by the end of next week, by the next show, we may be substantially south of here from a vol perspective, or if they do nothing, we may be still playing this wait and see game. We may be still hovering around these levels. What's your take? Or do you feel maybe it's going to come off regardless after the big event next week?
I'm going to do I'm going to be Rubini at the VIX or at the risk management conference. All right. 25 VIX is the new 15 VIX. And we're here to stay.
So you're one of these frame of reference guys. A new frame of reference from a vol perspective is what you're saying.
Yeah. So, no, I'm kidding. I think that, it's entirely possible that what you just said is true, that if they raise, we actually could see vol flat lower. And if they don't, and they're like, well, we don't know, maybe in December it'll keep this dog and pony show going. And, I don't know. I mean, my guess is we'll still be above 20, but probably not here. But, if they really do something screwy, because right now the market isn't really pricing in a rate hike. I mean, I just don't know. I think that right now with the market not pricing in a rate hike, maybe we drop a little bit. And if they do a rate hike, maybe we don't shake out by Friday and we're still here.
That's kind of the question I have is, does it all shake out by next Friday, which is, of course, our frame of reference for a show like this? And if not, and I'm kind of on the fence as well. I don't know if they do something crazy, if it can shake out by Friday. And even if they don't, there's still going to be a lot of will they, won't they folks out there now worried, obsessing about Dees. And that, of course, and of course, China. That will, of course, keep things alive probably to next week. So I'm probably on that same fence. I think we'll still be somewhere around here in these levels at this time next week. But again, the Fed could surprise us all, shock the market, and we could be at a 15 or a 12 handle next week. Who knows? But that is why this segment is so fun and often potentially embarrassing, because that's the nature of the crystal ball. And that's all the time we have for peering into the crystal ball this week. It's also all the time we have for this episode of the Volatility Views program. But before we go, as always, let me check back in with my cohort, Mr. Greasy Meatball, to let you know what he's cooking up over there in the land of the pit. Mr. Greasy Meatball, what is coming down the pike that may interest our Volatility Views listeners?
We've got this weekend, obviously it's after the show gets released. It's the show released after, but I did a volatility course on VIX and volatility. If you want a recording, you can still buy it at optionpit.com/VIX Primer. It's $147. You'll learn a ton. So if you're a person who asks some of the questions that we got today, you're probably a good fit to take the class.
That's going to do it for us here on the old Volatility Views program. On behalf of the Greasy Meatball and indeed myself, I want to thank everyone out there who downloaded and streamed and, of course, sent in such great questions. We love hearing from you guys. And we'll see you next week right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.